Welcome to Module 5, Section 3, where I will discuss industry groups in the S&P 500.
One thing that a lot of investors and traders use as a part of their decision-making processes is to use industry groups, looking for, first of all, a strong index, and then from there you might look at a strong sector, and then the next logical step is to go into industry groups, different groups within a particular index or sector that might be good investments. Personally, for the program that I teach, I don't focus an awful lot on industry groups. The way that I use them is just to evaluate the overall market and say, oh, this area is really having an impact on the S&P 500, or this area should be having an impact, but it's not, or this area I thought would have an impact, but it really isn't, or it's acting in the opposite way that it should be acting. Those are things that we take notice of, but to use them as tools to actually find investments, although that is a very plausible idea, it's not what I personally use. What they do is they take U.S. companies or stocks, which are essentially the same thing in this context. They're grouped together based on common business types to standardize the meaning and understanding. So if you take all of the different airline stocks and put them into one group, now you can look at all of the different airline companies and compare them with each other. Groups are defined by a thing called the Global Industry Classification Standard, or GICS. About 20 years ago or so, Standard & Poor's and Morgan Stanley got together and said, let's come up with a standardized definition for creating sectors as well as industry groups and subgroups within industries. Out of that was the GICS. So GICS was developed by Morgan Stanley Capital International and S&P Dow Jones Indices. Those are two separate companies that decided to work together because they both have to deal with the financial markets and they work together on Wall Street. Investors follow these groups because one stock may be impacted by a broader movement within an industry. If you're looking at the airline industry group and you want to find a good investment, you might look for the weakest stock within an overall strong group. We see that a lot in the markets where one company will come out with real positive news and there might be sympathy rallies that occur at the same time. You're looking for that basic context when you use industry groups, not just on day-to-day movement, but within the industry group itself. Are earnings going up? Are they going down? Are they seeing growth? Are they seeing contraction? Are they really expanding into new areas? What's happening within that industry group? You might work within that industry group and you know a lot about this, and that might be one of the reasons why you focus on a particular industry group. What GICS does is it categorizes stocks into 24 industry groups. I've looked at other lists where there's well over 100. So there's groups and there's subgroups and there's all these different kinds of ways that you can organize this. I just decided to stick with the standardized version. And then in the other video right before this that I have available to you, I talk about the 11 sectors that make up the S&P 500. Now that is something that I do focus on quite a bit. The industry groups, not so much. So let's compare sectors against industry groups. Market sectors have a really broad focus. You might have the IT sector, or the financials, or the materials, or the consumer discretionary. Those are broader areas. Now, even broader than that is an index, such as the S&P 500. Industry groups have a much more narrow focus. They're within a particular type of industry. To make it even more confusing, some industry groups, such as energy and utilities, also are market sectors. There can be some overlap between the two, not only in terms, but in definitions. Sector or industry group analysis can help explain market moves and uncover possible opportunities. That's why we do this. The reason I study industry groups is to explain market moves. I go, oh, wow, the semiconductor index is up really strong today. And I go, wow, that's performing pretty strong. Then I look at the IT sector. That's performing pretty well. The technology stocks within the S&P 500 are really performing well. Okay, now I have some information I can use. And of course, the inverse of that is also true. GICS is widely used in the financial industry, and that's why I focus on this. You can come up with your own style if you want to. I like to base things on standardization as much as possible because we're looking at things that millions of other people are also looking at, and we're looking at that information to make decisions knowing that other people are looking at that same information. Some feel that GICS helps market participants to identify and analyze companies using a common global standard. I go into this in more in-depth in my course, but just to explain that here, we have a whole process that we can go through when we're analyzing the market. Now, some people may go through this process to find investments or to evaluate current investments, but there is a global standard so that everybody's playing by the same set of rules. You don't have one thing being applied in one part of the stock market and something else being applied in a different area of the stock market. You're comparing apples with apples. And then GICS components are reviewed and adjusted annually. So they adjust these things, they make some changes. Companies change over a period of time. When it's warranted, they will make adjustments to the industry groups. So let's go through some of the industry groups that I use, and there are 24 of them. And on this page, I'm just going to list 1 through 12. I'm really just going to mention them. I may give a little bit of information about each one. We have automobiles and components, which used to be a real backbone of American culture. Now, none of the big car makers are even included in the Dow Jones Industrial Average, where a lot of middle America was built and a lot of the middle class was built. Then we have banks. There's also capital goods, commercial and professional services. They lump those two together. Consumer durables. These are things that last a longer time, like a washing machine or maybe a TV. It's not something like food that you have to keep replacing multiple times each week. And then consumer services. And you've seen that in American history where we've really switched from being a manufacturing society over to more of a consumer-based and services-based economy. A lot of the manufacturing is done now in other countries. A lot of the services that are provided are within the U.S. Diversified financials, anything from a savings and loan down on the street up to a brokerage firm. Energy, which is also a sector, and that can be a little bit confusing. Food, beverage, and tobacco. Food and staples retailing, so they break them down into different categories with food. Different healthcare equipment as well as services. And household and personal products. Then the other group that we look at, insurance, whether it's life insurance, car insurance. Different materials, which is also a sector. Media and entertainment, whether it's a big company like Disney that puts out movies or a small company that just operates locally but still is a publicly traded company. Pharmaceuticals, biotech, and life sciences. Real estate, which is also a sector, and we didn't used to really pay attention to that all that much. And then they changed things a few years ago in the S&P sectors, and now the real estate sector seems to be paid attention to a lot more. Retailing, semiconductors and semiconductor equipment, I've already talked about that, and it's its own different industry. For a lot of the cryptocurrencies out there, and a lot of the cars, and a lot of the computers, of course, that we use, we need semiconductors for those to operate. We just call them chips. Software and different services. Technology, hardware, and equipment. Telecom services as well. And then transportation, whether they're bus lines, railroads, airlines, whatever way that we use to be able to transport things from one place to another place. And then finally, utilities, which is also a sector. How do we use these industry groups? We can do it for information sharing. If there are different companies and they're actually trying to work together with each other, you'll see one pharmaceutical company may come out with a new drug and they own the patent to that drug. Well, then over a period of time, that patent expires and now these other companies are able to make generic versions of that drug. That's just one example. They may also do research and development together. Maybe they're in a particular part of the country or they're in a specific industry, and they may have some kind of a joint venture in which they work together to solve a problem or to bring a product to the market. Just as an example, one of the very first online services was a thing called Prodigy, and it was a partnership between Sears and IBM. Now, we just got the product Prodigy, but behind that were two different companies, one to help develop the technology and the other one to help market it. And then for political lobbying, when they bind together and they spend a lot of money, they can have a lot of political influence to do things the way they want them to be done. So what are some of the popular industry groups and the ETFs that are attached to them? And what I did is I went through the whole database and I picked out different industry groups based on average volume. This is a 90-day average of volume. So some of these may come on and off the list as you look at this over a period of time. But the first one are the Spiders S&P Regional Banking ETF, and I have the symbol KRE. And this is just a bar chart. I don't have any studies on here, no moving averages or oscillators. I just have the bar chart on the top and the volume along the bottom. I just want to give you an example of what these look like and how they've been performing as of summer 2021. This chart goes back about 2 years. So I tried to include the whole COVID plunge in this chart. The plunge pretty much hit every stock in existence. That might help explain part of the V-shaped bounce out of that. When everything's falling at the same time, things tend to hit bottom a lot quicker. Then we have the S&P Oil and Gas Exploration and Production ETF, symbol XOP, and they've done pretty well. They had their COVID plunge, but then they've been able to come back and set highs. They're a little bit off those highs as I record this, but they're still holding up quite well. Then we have the Van Eck Vectors Junior Gold Miners ETF. A lot of people are real fans of gold. One way that you can invest in gold is to invest in the miners, the people that actually go in, develop the mines, dig it out of the ground, and then possibly produce it. Well, these are the smaller companies that mine for gold. And their symbol is GDXJ. And a lot of times, this can be a proxy for gold, whether you're looking at bigger manufacturers or even the smaller manufacturers. Just like with investing in cryptocurrencies. You may not like cryptocurrencies, but you might invest in a lot of the computer companies that develop the monster computers that the miners need to be able to dig out Bitcoins. And by dig out, I mean by unlocking algorithms. Then here's the S&P Biotech ETF. I also have Invesco Senior Loan ETF. You can see it really got hit during the COVID plunge and then pretty much went back up to where it was before and has been going sideways. Here's another one, the S&P Metals and Mining ETF, symbol XME. I'm not saying any of these to endorse them or to recommend them. I just went through and found a list of 10 or 11 that had the highest average volume, and these are the charts that I'm showing you. Then you have the iShares Global Clean Energy ETF. So if you're really into the Green New Deal and getting rid of fossil fuels and the alternative energy sources, you might really like an ETF like this. And then the US Global Jets ETF, which is basically an aircraft index. If you're a pilot or an aviation enthusiast, this might be something that really interests you. And then the Van Eck Vectors Semiconductor ETF. I follow a thing called the SOX. That's the Philadelphia Semiconductor Index. But on the charts that I have, there's no volume attached to that. One reason I like ETFs is we can look at the volume across the bottom. It's one thing to look at price, and we have to follow price. No matter what our conclusions reach, we have to follow what price is doing. The strength behind a particular move may come across on the bottom by looking at volume. So I do a lot of volume studies in my analysis. And then there's also the S&P Bank ETF. So if you are involved in the banking industry, if you work for a smaller bank or even a very large bank, this industry group may be of interest to you. And a lot of times you may not even invest in this. But you might work in this industry, and so you follow what are stock prices doing? What are industry groups doing? What are sectors doing? The stock market is a very good indicator of economic conditions, and it always looks into the future. So if the stock market is going up, generally it's anticipating clear skies ahead. If the stock market starts to go down, it's anticipating dark skies ahead. So a lot of people follow this just to understand their own industry better.
This concludes Module 5, Section 3, and I'll pick up with things again in Section 4.